Good morning. It's Tuesday. It's about 8:45 a.m. Pacific Standard Time. So markets are actually retracing. They've hit a pretty good resistance point up here, and now they're starting to come down. This is a pretty long trend here. A lot of momentum coming up here. Not a lot of volume, but a lot of momentum. And it's a big run without any retracement. This is about a 170 point run with no retracement. That's pretty rare. If you look in the past and you look at all the other runs, it's pretty rare that it'll go up this high without retracing. It's okay for a market to go up several hundred points without retracing as long as it has balance areas in between. And this didn't have any. I mean, these look like they try to balance, but these lows right here, they're higher. I mean, they were balance areas when they're pretty much even, and you didn't get that here. So here's a little balance area here, but then it popped up in here. So I put this Fibonacci here just to show that in each trend, there's always a retracement. And so the retracement is going to be anywhere between this line and this line before it goes anywhere else. And this isn't 100% because sometimes what happens is a market will come down, hit this line here, and turn around and keep going back up because the trend is up. In this case, I don't think so because this is pretty stretched out without any balance areas in between. And when you don't have balance areas in between, chances of this hitting here and coming back up, pretty slim. I mean, it could happen, but it's just making a case for another downtrend, which is going to be pretty big at that point because then you're getting, it's already at extremes now. So chances are, I would say a good 90% chance that it's going to come down into this area before it retraces. And then if it's going to continue down, then it's got to balance out first. Now, markets can go straight down because when markets go up, they get kind of choppy like this and they go up usually. And they take a while, but when they come down, they can come down with a lot of force, especially in a bear market. We are still in a long-term bear market, although this is a trend right here. This is a short-term trend or mid-term trend going up. So it is trending up, and this could continue to do that. But in the long term, it's a bear market, and if that's still intact and this goes down, it could take some really big hits and wind up even down here before it's over, before even retracing. It's possible for these markets to do that when they're coming down. When they're going up, very unusual. Like I said, for this to go up like that, it's pretty unusual. So now it's time for this to start turning around. So the other thing is, people talk about dollar cost averaging. I look at dollar cost averaging differently. If this is trending up, but I know it's going to turn around because it's in the longer term bear market, then I dollar cost average up here. I'll buy some put options here, let's say, and then I'll buy some more put options here, and then I'll buy some here, and then this market turns around and then starts gaining value. These put options start gaining value pretty fast. These takes a little bit longer, and this right here maybe even a little bit longer. But eventually the market comes down, so these you have to buy far enough out. That's what I call dollar cost averaging. Most people call dollar cost averaging, what they're doing right this minute is they're buying stocks hoping that they're going to go up, and they're doing that in a bear market. That's not a very good strategy. That's counterintuitive. It's like you don't do that. It's like me if I'm buying call options here and this market's turning around and I just keep buying call options and it keeps going down and I keep buying call options knowing that this is a longer term bear market. Okay, so let's see. Let's take a look at some other. Let's look at a daily chart here. This is a daily chart. Let me go into a max and go into into, let's see, more of a positive. Okay, so longer term, again, this is a bear market. You know, we're still in a long-term bear market. There's no denying that. So, but within this bear market, you've got trends. Like here's a little bull run here, another trend going up, another trend going up, another trend going up, and this is where we're at now, right here. So it is trending up within this longer-term bear market, but we want to pay attention to this, but keep this in mind. Now, if you're a day trader, you don't have to keep this in mind because this really doesn't really matter for a day trader. For a midterm and swing trader, I would still keep this in mind, saying that, yeah, the market's going up, but it's only going to go up to a certain point and then turn around because you've got a lot of gravity momentum going down because of this line right here. Okay, so what I'm going to do here, I have my alert here. You can consider it as a stop sometimes because I have mental stops. I don't put in any hard stops unless I'm trading futures. Then obviously I have to have a hard stop in there. Otherwise you can lose a lot of money if it goes the opposite way. With this one, you've got a buffer of time in here and also a buffer of trend when you're trading options. So even though if I got put options here and the market goes up, losing value, but also knowing that it's only going to come up a certain point and come down, then I have that buffer of time right there for options. Can't do that with futures. Otherwise, you're going to lose a lot of money. Unless you're Warren Buffett, which he says he does lose hundreds of millions of dollars, but you can't, you know, unless you're like him, then you can go ahead and just keep riding this. But most people are not like him. So this market came up and it hit this very, very big resistance right here. And now it's turning around and it's got a lot of things against it. First, it hit the big resistance. The other thing, this thing has not retraced for a while, and it's time that it retraces. And that's what it's doing now. So let's see how long this will last as far as how far it will go until it starts turning around, retracing, and maybe turning around back around and coming down. And if it does do that, then it's changing this trend down into a downtrend. And so we'll see when that happens. But for now, we're paying attention to what's going on now. I do have some put options in here. They're starting to gain some value back. I did buy some put options this morning here when this line hit. And they've already gained some value just from this move. In fact, quite a bit, because like I said in my, let's see right here. So I did a video yesterday on how markets work, and I explained everything on, it's a synopsis of what I'm doing in my course, and this is a basic outline on how that's going to work. But anyway, I explained in here how how this works actually. I talk about retracements and up and down markets and how far the market usually goes before it starts to retrace, and all of that, all based on the ES, of course. Okay, so let's take a look. I haven't actually looked at the Russell yet. See what the Russell's doing. So Russell looks pretty good. Like I said before, Russell is kind of leading the way down. It's been doing that. It's never gone up to the top like all the other markets have. It's always stayed down here. So that to me just means that the downtrend, longer term downtrend, is still intact. See, I haven't looked at the NASDAQ either. Okay, NASDAQ obviously has broken up and has gone absolutely crazy up here. And you can see in the longer term. So I don't even see any type of resistance up here. It's basically just kind of floating up here. And now the NASDAQ actually has gone from here, it came up here, and it did this little balance area, which makes it strong. And then it came up here. So without a balance area in between these long drawn out uptrends, then the market will tend to turn around pretty fast. So this does have a little balance area in here. It doesn't mean that it's going to stay up there, because it's got to follow the other indexes. And then you got the Dow, which does not have a balance area in between this trend right here. So this is coming down too, and it's probably going to come down, break, and come down again into this area, but that might take some time. We'll see. Okay, back to the ES. So this is where we're at. So all we can do right now is wait. Like I said, if you did do some dollar cost, what I call dollar cost averaging, you bought some put options on the way up, and you bought them far enough out to know that when this market comes down, it's going to start gaining value here. Bought some put options here, and I believe here, and then I bought some today here, and so it's gaining value, and then you come down. That's what I call dollar cost averaging. Okay, that's it. I'm done. I think there's nothing else to do but wait. I'm going to wait till it hits my mark here, and what that tells me is the market's supposed to retrace. Let's go back into that again. Right there. Somewhere in between these two lines would be a healthy retracement, and then I can decide what I'm going to do with my put options. I can sell the ones that I bought, let's say up in here, collect my profit, and the ones down here still, let's say I bought some, I think right here. It might even be not even break even yet, but I can hang on to them because I bought them far enough out. I can decide what to do, or just take the profit here and just sell them all and wait for another bounce up, and then buy some more and then let it ride down again. So that's probably the strategy I'm going to take, but right now I'm not going to do anything until it hits this line, and then I'll see what kind of force it has going down, what kind of momentum and volatility is behind that, and then that's when I make my decision. I can't really say what's going to happen right this minute. But then again, if you do look at my video that I'm going to post today about how markets work, it will tell you about all of this stuff, how the markets retrace and trend, and all these things you look for. These are primary laws that all markets follow. Every security, every chart you see follows all of this, and these are secondary laws. Okay, so that's it for today. Talk to you guys tomorrow, and see what happens.